Maybe what we can do is we can just start with a quick round of introduction. Maybe quick means just literally a few lines, just a bit about yourself, about your companies. My name is Anubhav. I'll be moderating this discussion. Maybe we can start with you.
Good afternoon, everyone. Good afternoon, everyone. I'm Gulliaume. I'm the founder at Atato. We're a custodian, licensed, regulated, crypto custodian. Happy to join the panel. Nice to meet you, everyone.
Hello, everyone. This is Mahin. I'm founder of Liminal. We are building custody solutions for the eastern part of the world, and happy to be on this panel. Thanks.
Hi, everyone. I'm Clarisse. I'm CEO and founder of Defense, but today I will represent the MPCI Alliance, which I'm board member of, and I'm quite excited to tell you about all the initiatives that we've been launching this year.
Hi everyone, I'm Ouriel. I always say I'm ZenGo. I'm not ZenGo. I'm Ouriel, CEO of ZenGo. ZenGo is an investor crypto wallet. I was an early builder on MPC, probably one of the earliest builders of crypto wallets built on MPC, reaching 1 million users, zero account takeover. So that's us.
Hello everyone, this is Jay, one of the co-founders of Silence Laboratories. We build very customizable MPC libraries.
All right, thank you everyone. So today we'll have a few themes which I put down, but we'll obviously try and keep this discussion as free-flowing as ever. So I think the first theme which I would love to get everyone's opinion is more around ownership and user empowerment. I know a number of you are very, very passionate about this topic in particular. So I guess my question is, today we are seeing that there is a diverse set of solutions and products when it comes to digital asset security. Has the industry today converged on a transparent definition in terms of what ownership means and what empowerment means? Who wants to take a first shot? I see a lot of smiling faces.
You organize, you start.
Perfect. Then yeah, my answer is no. Everybody claims to be self-custody, and we have been pushing it a lot, and we have been talking with Ouriel and others. So custody needs a revisit and very proper definition, which has to be a function of multiple parameters. And it can't be a one-day thing. We need to sit together and define. We have people from NIST, and we'll work together and define very parameterized variables. Currently, I personally believe there are different flavors: self-custody, shared custody, and delegated custody. And we have to choose basis cases. Nothing is perfect. It depends on what user, what enterprise we are catering to.
Today, what I'm observing is that there is today a fundamental failure of the industry being able to qualify correctly how the market is structured. If you're looking like nearly the entire majority of market research articles, people will basically present the market as hot wallets, cold wallets, right? This is really how the market is presented. And this is fundamentally not just wrong, it's extremely limited because it doesn't qualify the market by the most important parameter, which is the security primitive and the way the wallet is structurally accessed and how it's defined. And so I like the way you frame the market. By the way, Silence has a fantastic blog post about it, and I use it all the time. I don't think we could write it any better, but I'm just observing that except very few people in the industry, the vast majority still presents the market in a very dated and I nearly want to say irrelevant way. And I think we need to pass by that. And the only way we can do that is that if more people engage into this conversation and acknowledge that the way to present the market as hot and cold is not correct.
So I'm going to add a new angle to, because I agree to everything that was said. I think there's a definition that we start seeing from a regulatory standpoint, that we start seeing across the world, across jurisdiction, which is the definition of custodianship is no longer, it's not only the ownership of the private key, but it's the control over the private key. And the subtleties are in this control, right? Is this control co-custodial or unilateral custodial or delegated, exactly. But I think we've moved from, a few years ago, 2018, 2019, 2020, we had jurisdictions that were really focused on the actual ownership, hence the divide between cold storage, hot storage, do I have my private key on-prem? And now, more and more, the notion of control to enable the possibility of using a technological service provider to operate your custody starts to be something that is, from a regulatory standpoint and definition, quite appreciated globally.
Very important question, and I think I agree with everyone. Just want to add a couple of points from my side. I think security is a spectrum, and same way custody is also spectrum. You cannot push same level of security to all participants, and same way you cannot push same level or same definition of custody to all the participants. I think as an industry, we have grown really good. I think we are 13, 14-year-old industry. And initially, we had wallet.date, which everyone has to... There was no hot wallet, cold wallet. Everything was hot. It was just one giant file. And from there, we moved to multisig, we moved to MPC, and now we are able to discuss these points. So I think we have grown as an industry tremendously, but at the same time, we have this notion of fundamentally that there should be a hot wallet, there should be a cold wallet, there should be this custody, that custody. I think ultimately we need to stop selling technology, and we need to start looking more at what value addition we are adding to the customer group we are targeting.
Yeah, absolutely agree that the last comment, especially, at Atato we work with SMEs, individuals, people that are not really educated. I have to admit I struggle with your talk, Nikos, personally, not being, at the level that many of you operate in terms of understanding of the MPC security. And so going back to the question of ownership and empowerment, I think for everyday users of crypto, whoever is in charge of my wallet is the person that I trust in terms of making sure that I own my crypto. So that's the first point I would make, is that for everyday people, whatever wallet I'm using is the person I trust to make sure that I can own my crypto. And then, as Clarisse mentioned, the regulation is now pretty clear. What is a custodian in many countries is extremely clear. And I think, to just finish on a more positive note, there is a recent research from PwC, for example, which outlines the market a bit differently and introduces the notion of a wallet infrastructure provider, which I think is interesting, which is someone who is providing the infrastructure to run thousands of wallets, but may not have the licensing in terms of a regulated financial authority licensing. So I think that this new vocabulary that we're coming up with is a step in the right direction of clarifying who's in charge of what.
Interesting. I think what really stood out was, I think everyone is kind of aligned. So I have a panel that's very aligned on the fact that we don't yet have a fully transparent definition, but I also saw a sense of optimism that exists. I guess I still want to probe a little deeper, and I heard Ouriel talking about the fact that maybe more people need to be engaged. Clarisse, you mentioned about control being an important factor. I would love to get everyone's perspective on, are we actually moving fast enough? Because I did hear the fact that, a lot of rapid steps have been taken over the past 12 to 13 years. Is the industry doing enough? And secondly, if you had to still pinpoint on that one area where you would want everyone to really, just from your own perspective, really double down, what would that look like?
Now it's working. MPC works better than this microphone. No, clearly we're not doing enough. And the metric that we have to remember is simple, is that most of the crypto today is custodied by centralized custodian. Even after FTX, even after Celsius, even after all those things, the majority of crypto, I repeat, is custodied by systems that are not in the control of the users, not owned by the users, whatever you want to use that word for. So clearly, 12, 13 years forward, we have not moved an inch. Also, I want to also remind another stat: the number of hacks and user errors and crypto lost is just only increasing, not decreasing. So clearly, we're not doing enough. And so, by the way, applies to custodial and non-custodial systems. And I think you asked what is the one thing that we might want to change. Sadly, I don't think there is one thing we can change that would move the needle here and there. I think it's incremental efforts that are progressing. I think today the state of the market, at least in terms of options, is tremendously better than what it used to be 6 years ago, at least when I started crypto. So when I started crypto, people say, get a hardware wallet and you'll be fine. It just so happens that it's not true. But today you have a variety, wide gamut of solutions. And I think those solutions offer different type of approaches for different type of needs. And I think we're going into the direction. I don't think there is a magic wand that will make people switch overnight. But I think we're getting there. And I think it will take another 10 years. So it's not going to happen fast. 10 years is a range, by the way.
And just to add on that, because I definitely agree, I think if we look at the history also, I was just looking at the history of SSL and TLS, it took 16 years, arguably, until we got to a stable version that everyone uses with confidence. So I think in some way also we can be happy with the progress. Although being an industry insider, you always wish things would go much faster. But there's only so much brain power available to understand the talk that was given earlier. And so I think we have to accept the fact that it's going to be a few years until we'll have a generally accepted MPC standard. And to go back to your question, in my opinion, that's the one thing that would allow the industry to move faster. Is that if everyone agreed on a protocol, maybe with some compromises, I'm sure that this would allow the adoption to grow faster, in my opinion.
So just to double down on that, because it's a perfect transition to one of the topics I wanted to discuss today. So today at the MPC Alliance, we have about 60 members. The MPC Alliance covers digital asset security, but also privacy subjects. So not all the members are developing applications on the digital asset security. But what we started, and we started that before the summer, and then hired an executive director, former Microsoft cryptographer, PhD in cryptography, Brian, who will be leading these initiatives, which is, we looked at our community and what was needed to accelerate, right, the understanding of our technology, but also the spread of good MPC implementation, making sure that there was a good way to actually benchmark HSM's technology against MPC, against SSS, etc. And so we've decided to start the journey of standardization. So standardization is a big term, right? Obviously, NIST efforts have been starting on threshold cryptography. That's NIST going, and everything we can provide and help, we will. And so we're trying to also pour resource or collect resources at the MPC Alliance to be able to contribute at NIST level. The second axe is trying to develop reference documentation where we can actually, help design what is a good MPC implementation, what are the components that should be in a good MPC implementation, what are the papers that have been pretty much proved, which one are the one most used according to which use cases. So these are the first set of items we're going to go for. But I was just with the MAS, which is the local market authority, and what they're asking for, and that's the third kind of development we're looking at, what they're asking for is actually not just a way to look into the tech, because they don't have a way to analyze the tech, and that they're not, a audits company. What they want to know, it's a governance framework of, if I look at an MPC implementation, why should I pay attention at, right? If there's key refresh on the technology service provider side, does it mean he has control? If it's on the client, does he have control, et cetera, et cetera? So it's being able to say, on a standard implementation or 2 out of 2, we're in a co-custodial model. Therefore, if the backup lies on one side or the other, this is what happened on the control. So this is a governance framework that we need to design, and this is I would say, one of the very important initiatives that we'll be launching in Q4. It's going to be work in process, and please join us, contribute, because what we want to do is making sure that regulators, clients, large companies that are entering this field have the necessary tools to be able to opt for the right solution and the right designs. Because at the end of the day, we're building the infrastructure for the next decades to come. So it's important that we do it right. Yeah?
So just to answer your question, I think as an industry, see, we are basically tech industry. Everyone is coming from a tech background here, so most of the time we take things for granted. Like for an example, MPC is pretty easy for me to understand. There are shards and like there's distribution and everything. But if I go and explain this to some normal people, then it would be very, very difficult for them to understand because they are coming from a very traditional mindset, banking infrastructure where they assume that their money is going to be protected by bank and they don't have to do anything. It took them years to understand password and OTP. So I think the tech is moving very, very fast. You can see, for an example, before MPC became generalized in digital assets, at least the crypto security part was moving little slow, but MPC has improved the entry barrier. Now entry barrier is very, very low. The innovation is much, much faster there. The same thing that smart contract has done to DeFi now, MPC has done to key security. So tech is moving really fast. But the user adoption, the user awareness, and the education around it is going to take time, and we all will have to accept this. I think one of the fundamental things that we can change and we should change is if we understand that if we are going to change the fundamental way people think about custody, then it will take some time. We might want to build a system which is in between to their custodial model and the full self-custodial model. But I think this is a difficult problem. A lot of implementation are working on it. But I agree, we are looking at around about 10 years where we can actually, people can actually use the power of this technology where they would be able to control everything.
I think that's is there anything you'd want to add to this? Okay. I think it's a perfect segue to, you talked about educating people who don't even understand what MPC is. And I think this is the time when some of them have started understanding what multi-sig is. And then, another technology gets thrown their way. My question is that, yes, there are cost implications. And maybe we can start with either of you from an enterprise perspective, but would also love everyone else's opinion. That what is the rationale for a business, to choose either an MPC or a multi-sig outside of cost, right? Like I understand that there's a cost implication, but let's for a minute assume that that wasn't the case. Why should they choose which, and does it actually vary depending on an enterprise or even the end customer?
Maybe I can take this one really from the perspective of a not super educated user. Us working mostly with SMEs, small teams, they don't have a dedicated security person. So the one single argument that usually wins them if the question comes to MPC, which many times it doesn't, is this is what banks are using. Just say, this is what banks are doing. If you want bank-grade security for your wallet, come and talk to us. And most people, once they have an understanding that there is some level of industry standard that is being used, they're not really interested in the detail of how their wallet is secured from a cryptographic point of view. And so just saying that it's licensed, regulated, audited, this is what banks are using, usually for the customers we work with, that's perfectly good enough.
I'd love to get a perspective also of like maybe a step before that, because this is a situation where you now are using the credibility of some partners that already exist, which is very relevant for SMEs. But curious to know, if you take a step back, and what is the story towards a bigger player who's not necessarily going to get convinced by the players that are already using it, but just purely in terms of the technology?
Maybe it's a different perspective if Defense or Liminal want to share.
So, of course, this is MPC heavy conference and people are very much involved into MPC, but I have a very simple take on multisig MPC. For me, multisig security comes from protocol most of the time. For an example, I'll take the easiest example for me, which is Bitcoin. I see it very simple thumb rule. If you want assets in motion, then MPC is much better, much more efficient. Of course, I'm taking the cost example here. But if I want assets not in motion, and then I would still prefer, at least on at a Bitcoin level, multisig. The reason only being I still see vendor lock-in with MPC, at least as of now, but that is going to change pretty soon. So I still believe that MPC is going to be the de facto technology for key security in the coming years. But at least as of now, looking at the standardization, looking at the especially Lindy effect, I would still go for something like Bitcoin. On cold assets, I'll still go for multisig. I really don't think there is any doubt or any question when you are looking at assets on motion. There is multisig can even compete with MPC. I'm just trying to answer specifically on multisig and MPC.
Just very quickly, maybe to be factual, I think with using MPC, if you for security purposes, if you want to remove the single point of failure, it's yet to be the best technology to do so. That's the first thing. For business continuity, you can, with MPC, imagine setup where you don't need all the parties to actually sign a transaction, so you create resilience. You use MPC when you want to build co-custodial model, and I think the reason why, and Auriel is one of the pioneers, obviously, of that road, but the reason why today we have usability on self-custodial experience is thanks to MPC, because we could move away from pure hardware solution and develop co-custodial model that were very easy to use, and so this leads to when we have use cases, potential mass adoption, so that there's a path here. So at least the infrastructure is no longer a roadblock. Now it's the use cases. And so I think those would be the kind of 4 or 5 painkillers, obvious painkillers, or reason and decision why we have a lot of companies today building MPC.
So I give a different color because we don't serve enterprise, we serve users and investors directly. But one thing that we learned is the less we say, the better. And it's not because there is nothing interesting to say, is that actually most people don't care. And they only care about 2 questions. The first one is what can go wrong, and can I recover my wallet if I mess up? And you have no idea how many things can go wrong with users, including specialists. So they really care about that. Like, can I lose my assets? And what do you do to prevent me from making those mistakes? And the second one is, do you provide good customer service? That's really that. And so if you focus on those 2 questions, most people will not care about the technology stacks. Now, the bad news is that you do need a technology stack to provide those 2 things really, really well. And it so happens that MPC, and we all in the same conference here, so we likely agree, but not everyone in the world agrees yet, is that it's probably going to be a defining technology stack in order to do that, whether you service enterprise or whether you service end users directly or indirectly. So the less you say, the better. As long as you provide value, the users will probably be happy with your solution.
But I think just on that, just to, I guess, probe that a bit further, similar to what we discussed earlier, is there a case because you reach a place where users don't care because they're sort of the laggards, right? What about the earliest adopters? So the people who are embracing that technology for the first time, and then the chances that the rest follow, right? But even in the retail context, what are your thoughts for the first 5%?
Oh, no, the early adopters, they do care, and they are the very vocal minority. And so when we first started 4 years ago with ZenGo, like everybody hated us. They say, "Oh my God," because choosing a crypto wallet is basically like choosing a religion. And so if you ask someone to like change roots, you're basically asking for treason. And so when we first started, we said, "What? No private key? Like how can that be? Never, ever, ever again." Now the vocal minority is right for the vocal minority, but it's never right for the silent majority. So what I was referring was about the silent majority. However, the proof is in the pudding. You need to also show that you are delivering something that is indeed secure, that is indeed usable, and that is over the stress test of time, and through progressive incremental improvements. But I don't think most people care about the technology choices that we make. That's the sad reality, at least in the consumer world. In the enterprise world, I think it's a very different reality. You want to add something?
No, probably everybody has added. People do care just about the function, control of the key, and whether they can recover or not. So to us, and basis our experience, we typically cater to MPC customers and enterprises. Our take is most likely in retail world, particularly in Ethereum, we will see different motions around multisig, maybe, but globally across, like Mahin said, if your assets are under motion, MPC is the solution, because the level of control, hierarchical systems, and configurability which it provides, it's much more superior.
I think we talked about transparency at the beginning. We talked about accessibility right now between services. I'm curious to potentially talk about flexibility over here. There is so many, when it specifically comes to protocols, there is so much that is happening. So how do you ensure that you are building in flexibility given the number of protocols that are happening, given the number of changes that are happening, given the fact that this system is also open to a lot of vulnerabilities? We've talked about that the whole of, today and potentially tomorrow also. So what can one do to drive flexibility in an environment where you know the entire system is extremely vulnerable, also given the lead times it takes to actually build something out?
So happy to take this one because we're a buyer of MPC at Atato. We don't build our own MPC. We buy MPC solution from others, and so making sure we're not locked in with a vendor is a big concern. And so I can talk about the need for flexibility then. And I think what's, to me, is interesting development that's happening in the EVM world especially, is the notion that your address and your keys may become different things in the future. Account abstraction, something that I'm sure many of you have heard about. And so the notion that you may have an address, which is your on-chain identity, you have your names, your tokens, and all of that. But you would be able to take that address, and maybe you start with ZenGo, and then as you grow, as your company grows, you want something else. The notion that you could take your tokens to another wallet provider, I think is very interesting as a user. And then as a builder of wallets, we can also use this notion so that instead of the private key being generated by an MPC solution, if you're just using MPC to sign user operation in an account abstracted wallet, then you can switch, if you want to a different MPC solution or whatever comes next in 5 years. It takes a bit of work, but that's something that's now possible. And I'm very encouraged by all the work that's being done in the EVM community to make account abstraction wallet very gas efficient. And I think that's going to be a great solution to deal with the problem that you outlined here.
So I think at a fundamental level, I think MPC is a powerful tech here. So like for an example, at Liminal, we have built a very flexible modular infrastructure. We treat key store very differently. Then we have security rules, basically your business rules, and then there is a blockchain layer, then there is application layer and compliance layer. You can theoretically choose multisig as well and MPC as well as your key store. You have all flexibility. But because multisig is very tightly coupled with the protocol, the way protocol interacts, I think MPC, if you look at from flexibility perspective, MPC is much, much more powerful because it allows you to separate the key store from the protocol interaction. And I think that is very powerful concept because now theoretically you would be able to take blockchain agnostic view, application agnostic view, and you would be able to create similar seamless user experiences across protocols, across applications, and across experiences. So I think fundamentally we are reaching that stage now. We have actually started our journey to provide more flexibility to including enterprises, including retail with MPC. So I think MPC is a very good addition in terms of providing flexibility to users.
I can add some points. Right, so you mentioned 2 points. One is very fastly moving protocols. So today itself in the conference, we heard multiple protocols in MPC. And then another aspect is how to counter growing vulnerabilities. So as a MPC company or as an MPC body or enterprises using MPC solutions, the way we cater to will change certainly. But for us, let's say, the way we are trying to target is we need a very niche benchmarking systems where we are benchmarking for the case basis. If we are trying to build solutions which are for mobile phones, we need to understand whether the protocol is consuming how much of battery, how much time computations are required. So those benchmarks should be very, very subtly defined and propagated across all use cases. And then we can dive into the other aspects. And about the vulnerability, probably we need to have a structured team inside, a proper R&D team and proper development team. And it came in the panel itself as well that academia can't just fix everything for perfections because incentives are different. So we need to back both engineering and R&D team inside as well. So yeah, that's how probably we can have something viable in a very, very fastly moving protocol race happening around.
And maybe one last note on that point. I think because of this need to actually bring to builders this flexibility of thinking, which protocol I'm going to use for which use cases, and because today we're still in a very nascent industry where we lack patterns on use cases, and so we lack way of deriving features that we need for those use cases. I think coming together as an industry, sharing actually use cases and saying, all right, for this type of use cases on the payment, we need fast MPC. What are the protocols that enable us to achieve fast MPC? How? John earlier talked about the pre-signature, etc. So trying to really start building together this library of use cases where we can actually define, because I don't think there's one protocol fits all. I think there's going to be several according to this type of use cases is very important, and that's something that we want and we need to encourage so we can start building more standards, even at the selection of the algorithm level. Standards that are driven by features we need for specific use cases.
Fair enough. I think a lot of interesting perspectives. So my last question for today would be, MPC we know is shared across multiple parties. So what happens if one of those parties goes bust, right? So I'm very, very curious to understand everyone's perspective when it comes to specifically business continuity. So there are two questions here. One, are the right measures in place to ensure that the end user is protected? That's one. And do we actually think that companies are doing a good enough job telling people how they are protected in a very, very clear and simplistic manner?
All right, I'll start with this one because it's a tough one. So the short version is we spend a disproportionate amount of time thinking about this problem. And when we launched the wallet, people were asking, even before we launched, like what happened if ZenGo shuts down? So we actually built a solution that would be able to take over ZenGo, independent of ZenGo in case we are unable to operate. But that was not enough because indeed ZenGo could stop operating, but there is one more party you need to think of is what if the user stops operating, right? What if, for example, you die, okay? Or what if you are becoming physically incapable of accessing your wallet or just sick and you don't remember you have a wallet? And so we recently launched a solution that protects the user against himself so that there is a continuity of his wallet. We launched what I think is the first inheritance style service for users that is usable, accessible, so that they can transmit their wallet to the person of their choice in case this situation happens. So you need to think about what happens if ZenGo dies, inverted quote, and what happens if the user dies. And now if you're looking at all the wallet market, you will see at some point one of those two cases is not covered, if not both.
See, I think and it's a very, very interesting and important question. And that is where I think, to me, honestly, at personal level, Lindy effect comes into the picture. I believe that specifically for MPC, it's not only about users or even the party. We need to look at the software, the MPC implementation also, because at least at this stage, we have a vendor lock-in. And what if that particular software stops getting updated for whatever reason, okay? What if that particular software becomes non-accessible for, let's say, political reasons or whatever reasons? So I think this is one big issue, according to me, for MPC, until and unless we solve open source, all commercial available implementations for MPC, safe implementations. Till then, I think the BCP-DR, if we try to solve it at a company level or user level, of course, these are there. But like for an example, if we say, so Liminal also gives you a recovery kit or something. At enterprise level, at business level, I expect there would be a development team. They would be able to complete the recovery without Liminal. But I don't expect a normal user to do that on their own without making a mistake. It would be very, very insecure environment in which they will perform this. So I think it's a still evolving space. And of course, companies like ZenGo, Silence Labs, and a lot of players are working on this. And we would be able to solve this, because once the problem becomes a software problem, then it's much more faster to solve it. And I'm very, very sure that we would be able to solve this part also in terms of BCP-DR. Otherwise, in general, BCP-DR is, in case of enterprises, in case of businesses, already taken care. And as ZenGo has pointed out, Ledger has also tried to solve this some time back. So there are retail solutions available, and there will be retail solutions available. One thing is that we are doing good compared to the traditional industry here, because we are at least giving this option to user. May not be that good at this stage, but we will become good as the time grows.
Clarisse, for you also, any closing remarks?
Sure. So I want to share that if you're a licensed custodian, then the answer is very, very simple. Your licensed custodian is in charge of this. They are in charge of DR, they are in charge of BCP. The good thing is, it's a legal entity that you're working with. So it's not like installing a software or buying a piece of kit. You establish a contract with another company, and then you enter all the legal system. And people have been having business disasters, dying and dealing with estates and things like this for hundreds of years. The legal system has all the necessary provision to deal with trust, change of control. And also, if you work with a custodian, you can get insurance. So that, you can get also an extra layer of protection on top of all the, certification, licenses that your custodian has. So I think, there's different approach. There's a spectrum from the fully custodial to the, do-it-yourself. And, there are valid solutions for everyone with different requirements. But I would say that if you're less educated, you're in a country that luckily has implemented crypto custody licenses framework, then you would do it this way. In many ways, when we do self-custody with crypto, in my opinion, it's like putting your money under your mattress. Like, sure, you can do it, and you can build a vault and have fire protection and 24/7 security and so on. But is it something that most people want to do? Absolutely not. Put your money in a bank. So I think for most people, working with a full custodian, in my opinion, is an appropriate solution.
Got it. Thanks. Clarisse, you have a minute.
Yeah, I'll just say that I think it's amazing that we're asking ourselves, what happened if, because it shows that that MPC is such a powerful technology that has embedded natively recovery mechanisms that this is probably the right technology for digital asset security, because with the other take, like, what happened if? Well, game over, right? So this is not the case with MPC, and I'll just finish. This is exactly what regulators across the world are really trying to wrap their head around, is what happened if. And this is where we also need to explain them. It's really just modeling, right? It's modeling the different protocol we have with different scenarios and trying to come up with some sort of governance framework together so we can clarify. There's no guessing. Everything is, once again, very much clear. It's just about making sure that we've tried to design all the implementation as an industry together, and that we can give this guidance so people can see through this implementation without having those technical capabilities.
Got it. I think we're going to be a little out of time for questions right now, but the panel is available. They're accessible over here, so you can always get hold of them one-on-one in the next hour or so. But thank you again. Thank you so much to everyone. A round of applause for this
Thank you.
great panel, please. Thank you so much. Thanks.